All right, guys, welcome to Wide Awake News Radio. I am Charlie McGrath, your host. Second day of July, Tuesday. I'm coming at you from, of course, the Rinse Radio Network, but would like to invite the folks who are not in the chat room to join us in the chat. Go to wideawakenews.com, click on the Wide Awake Radio microphone. Gary, are we sending the signal out to Next News Network?
Yes, it is going out.
Okay, so we are sending the signal out to Next News Network. We're not sure. We took a hiatus when Gary, our technical expert, as well as host of Monday night's program, I'm going to go on a limb here and say Wide Awake News Radio with Gary Hendershot. When our technical man decided he needed to go feather his nest for a month, so he did that, and we weren't able to send the signal out to Next News Network, but we are back there now. So if you're watching on Next News Network and you want to come over to wideawakenews.com, get in the chat room, you are more than welcome to come there. If you want to see myself and guest tonight, the great Ellen Brown, do this thing live, you can go there, wideawakenews.com, click on the microphone, and the link for Justin TV is there inside the chat. Thank you very much, Gary Hendershot. Thank you, Kirsten Megan, for filling in on Mondays for Gary while he was gone. Gary, thanks for doing the production tonight, sending this feed out, putting it up on YouTube later, and, of course, hosting your Monday night program, of which, by the way, I got to listen to most of that, and I want to rebut some of the things. I wanted to call in last night, but you know how I am. If I get on the phone with you, I'd be yakking the whole time, so I didn't. And
I wouldn't have got a word in edgewise.
No, you wouldn't have. Now turn down your mic. It's my turn. Anyway, it was a great program, and I look forward to hearing more from you on Mondays, covering the news. Not that alternative energy isn't an important topic, but I know you are well-versed in many, many other topics other than that. All right, like I said, Ellen Brown is our guest tonight. Let's get right into it because she's got a book to talk about, a new article to talk about, and some current events that I definitely want to cover. I told Gary before the program, man, Ellen Brown becomes more famous every single time we have her on the program. Her latest article, it's true, Ellen. Not only do you have manservants running around and all kinds of help, you're just becoming a huge star in independent media, which is well-deserved, I might add. Ellen Brown, author of Web of Debt. She is also the president of the Public Banking Institute, a topic we more than likely will hit on tonight because we do every single time you're on. Ellen, welcome back to Wide Awake News Radio. Always a pleasure and an honor to have you here. And your hair looks terrific.
Thanks, Charlie. Great to be back. And I learned that on a YouTube video from a teenager. How do you use a flat iron to grill?
Oh, okay. You were telling me the story, but the music was so loud coming on. I thought you said you went to one of your lady servants that you have, this stable of servants.
I have one type.
And she did your hair up. It looks good. Yeah. Anyway, it looks good. And thanks again for coming on.
So these little girls get like 2 million hits on their little videos for how to do your hair.
Now, isn't that incredible? I know exactly what you're talking about. I'm pretty happy because I put out a video last night. A lot of people saw, and I think we're up to 10,000 views on that video, which isn't bad for one day being out there in YouTube world. But when you do step back and realize that, okay, 10,000 views in independent media in a day isn't bad, but when you look at the Talking Orange head or some other kind of, not to say it isn't entertaining, but absolutely meaningless information that gets put out there that just is either shocking or, let's just face it, dumb, period, and they'll get, millions of views. And it really, I don't like to, when I see those, it's kind of discouraging because you're like working so hard. You work very hard on your articles. You write, you're a voracious writer. But when you come on the program, this video that Gary will post later, you and I will get, because you're Ellen Brown, it'll probably get a couple thousand people will sit and watch this 40 minutes during the YouTube, and plus how many of us watching now or listening now through Rinse and Next News Network and other outlets. So let's just say on a good week we get you on the program, all total, we might have. People ask me this all the time. How many people listen? We might have 10,000 people in the next week that hear, watch, or read transcripts of this interview. And that's a good number. More and more people are waking up. But it's not enough, is it, Ellen Brown? And it is it discouraging to you to see pop culture drivel that might show up on Huffington Post like you are? You're a writer that deserves to be there. but an article that is absolutely meaningless and really causes more distraction than anything. Is it frustrating for you to see that? To see the
well, for most people, there's not much they can do about banking,
right.
But their hair. Now, this is an important topic. I understand why she got 2 million hits. She was good. That was very instructive.
Yeah, okay, look at me. Do I look like I care about my hair? This is the Armageddon do, and I'm running with it until the end of time. Hey, and I get it.
I like that T-shirt.
Thank you very much. I'll have to send you one. I'll send you one. If you wear it the next time you're on, I'll send you one. I think that's a deal. All right, that's a deal. And I get it. That people, everybody has interests and hobbies, and it's important to have something outside of this, outside of being a political watchdog or reporting the news or anything like that. It is important to have things outside of it, but it is also, I think, a testimony of society that we are truly focused on things that are I don't know how to say other than just not important. There's a lot of trials and tribulations ahead in the financial sector, in the political arena, geopolitically. There's all kinds of things going on right now that demand the attention of the people that call themselves Americans, because the outcomes are so important. Be it starting a war in Syria, or what's going on with Snowden, or a number of financial issues that we're going to touch on tonight. These are things that more and more people should be paying attention to, because it does directly affect their life. I do agree that, yes, a very nice hairdo like the one you have makes you feel good, and it is important. But when I look at a YouTube video of a talking lemon head talking to a talking orange head, and it gets 50 million views, I'm like, my country's in a lot of trouble. Just a observation.
Yeah, I agree. Well, I'm head of the Public Banking Institute, and that's what we try to do is give solutions, because I think most people think, well, there's nothing I can do about it. It's just depressing. I don't want to know. Don't tell me about war on the other side of the world, because I'm not involved. Nobody's listening to me. So I'll just turn on something humorous and escape. But if there is something you can do, then you get quite excited and fired up about it.
I agree wholeheartedly, and I think that's why I continually ask you to come back on, and you haven't been able to for the last couple of weeks because of your new book, which we have about a minute before the break, so I probably won't get too deep into that till the backside of this break. But it is something you do, and the public banking solution. Let's get an update, because as of the last time you're on, North Dakota was the only state that had a public bank. Montana has proposed legislation. Has there been more of a groundswell? And did the event in San Francisco, I think it was San Francisco, the conference, how did that go?
The conference went really well, exceeded expectations. It's quite exciting to me that we had speakers of not just, sometimes these conferences are just about monetary reform, but we had speakers about a broad range of subjects and from a broad range of causes, which is what I think needs to happen. There are all these groups that are working for different things, and they all have a just cause, but they're just not big enough. They don't have the impact. But if we could all get together under one umbrella and have a real movement, in other words, get the grass moving all in the same direction, we definitely outnumber the bankers. They've got more money, but we've got more numbers, so we could win.
No doubt about it. What were some of the, you were saying it was other than just public banking. What were some of the other agendas or topics that were covered?
Well, our keynote speaker was David Cobb, who is from Move to Amend, or that's his thing. But he's such a rousing speaker. I mean, he was perfect for a keynote. We had a whole evening on the TPP, the Trans-Pacific Partnership. So there was a series on the post office in the 1930s that was quite.
No, hold on. Let's take the break and we'll start with the TPP when we come back, and we'll definitely get on the topic of your book as well, plus a few other things that some of which I sent you today, some of which I didn't. I'll surprise you and see if I can't stump you, which I've never been able to. We'll be back with Ellen Brown, author of The Web of Debt and author of, what's the name of the new book?
The Public Bank Solution.
Okay, all those choices that we went over before. Okay, the public bank solution. We'll be back with Ellen Brown and more Wide Awake News Radio in just a minute. Please hang tight. Welcome back to Wide Awake News Radio, second day of July, Tuesday, 96 degrees in Bozeman, Montana, hotter than it's ever been here, ever in the history of the planet. And we are striving to keep the program going, even though it's melting my computer and giving Gary all kinds of fits. Ellen Brown, author Ellen Brown, and also the president of the, what is it, the title?
Public Banking Institute.
I was going to say Public Banking Solution, not
That's
Institute.
That's the book. That's the title of the book. I thought you meant the Institute. Yeah.
No, I did. You are the president of the Public Banking
Institute. Yeah.
And your latest book, you're obviously, everybody knows you're the author of The Web of Debt. Your articles are everywhere over independent media and even some establishment media. And your latest book is Public Banking Solution. How has it been received? I know you were working feverishly to get that done and published. How's it going? Is it getting as much response as you would hope for?
Well, I must admit it was a little late getting delivered. It was an error of the publisher. As it happens, I am the publisher. So
it's your fault.
I screwed up. Yeah, so it got delayed. So I myself haven't seen the books yet. They're in the mail. I understand that they're being delivered any minute. But so the reviews that are up there are people that I had forwarded PDFs to early.
Yeah, I remember getting mine.
The Economist said they wanted to review it. They wanted me to get a copy to them right away because they have a deadline. And Fire Dog Lake wanted to review it. So that's cool.
Now, you said The Economist had a deadline?
Yeah.
Oh, the Economist, the magazine.
The magazine, yes.
Okay. I thought you meant, well, that's outstanding.
Yeah.
Well, I hope it receives the attention that you deserve for all your efforts in public banking. You were starting to tell a story, and your stories are always interesting because they're always based in fact and in history. And we've covered, the Canadian or our own monetary policy of the past in different places around the world. You were starting to tell a story about the post office in the 30s. Can we get that story in?
We had three. These were speakers at our conference, and one of them was a professor from Berkeley who says he's on an archaeological dig. He's preserving the structures of the 1930s that we've totally forgotten about, the artwork that was created during this time when the government was totally broke, theoretically. I mean, we were all broke. And they made these amazing post offices, among other buildings, that had murals. They hired artists to do the murals, and they're now being sold off. So that's what he was going around photographing, all these post offices that were being privatized. And then there was another speaker who talked about, he was from the Postal Union, and they are working on setting up a postal bank in order to save the post office. This is something that is done in a number of countries. We used to be done in our country from 1911 to 1967. So the biggest depository bank in the world is actually the Japan Post Bank. And they use that money to fund the government. It's really that's how they managed to have this 225% debt to GDP ratio and still have something like a AA rating. And I mean, they're not in the situation of countries like Greece and Cyprus, which have actually much lower debt to GDP ratios. But the reason is that their debt is held by themselves or by the Japanese. So they're not subject to the whims of the bond market and speculation and so forth.
Yeah, no doubt. They're holding it themselves. The people are holding the debt of the land. But I mean, there still is, there's a lot of debt sold on the market, and there's a lot of derivative debt created on the Japanese debt. Is it not? Is that not true?
Well,
I realize that the government has issued a lot of debt, and it's taken, it's using the wealth of the citizens of Japan, but there's still a lot of speculation on Japanese debt, and there's a lot of exposure for people from institutions like J.P. Morgan to Japanese debt. So if Japan is one of these countries, just like most around this planet, if they defaulted on their debt, it would create a tsunami of failure because of speculation, not necessarily, on the debt itself, because the majority of it is the wealth of the people of Japan, but the speculation on that debt.
But they can't default. There's no, I mean, they could only default out of stupidity because, like us, they have the power to create their own yen. So their central bank could print yen and buy the debt. They can't default. You could argue that that might be deflationary, but I would argue, I mean, inflationary, but I would argue that it wouldn't. I think that that's actually what they should do. I think we could jump ahead to that. You mentioned the fact that central banks have been pulling out of U.S. debt because
right.
Bernanke has threatened to ease up on the quantitative easing and to raise the interest rates. But I think that's actually a good thing. Why do we want foreign central banks to own our debt? Because what happens when any debt that isn't sold, when they have a bond issued or an issue of treasuries, any debt that isn't sold is bought by the Federal Reserve, and the Federal Reserve rebates the interest to the government. So I think all of the debt should be owned by the central bank. I think that's the way governments should fund their debt, is through their own central banks. Why do we want to be in debt to other countries?
I agree. I do agree with that. I mean, of course, I would say that as long as that central bank is in a private institution and it truly is utility of the people, which ours isn't, right. And in fact isn't, on that article, boy, you know what? I don't know if it was in that one or one that I meant to send you and didn't. It showed that the Fed is actually unloading U.S. debt, and in fact, there is they've unloaded as much as any time back to 2007. And in fact, during this break, I'll find that article and kick it over to you real quick, because I thought that was very interesting that even the Fed is backing away from debt. We're going to be back with Ellen Brown and more Wide Awake News Radio in just a minute. Please hang tight. Guys, welcome back to Wide Awake News Radio. Ellen Brown, author and friend of the program, is our guest tonight on this second day of July. Third segment we're going into here tonight on Wide Awake News Radio. Ellen, I searched diligently during the break, and I'm going to continue to try to search and talk at the same time, but as of right now, I couldn't find that article. And if somebody in the chat has it, put it in there.
It seems to be unlikely that the Fed would sell government securities, because that's what they do in open market operations in order to reduce the money supply. But they're aiming for 2% inflation, and they've only got 1% now, I think, technically. So they say something like that. So I don't think they're trying to reduce the money supply at the moment.
Maybe it was just their balance sheet, Federal Reserve balance sheet lowest since 2007. Let me see if that could be the case.
Dumping mortgage-backed securities, that's something else. They might be doing that.
Well, let's move on. Obviously, I misquoted what. Dang it, that bugs me. Because I usually can type in a snippet of a paragraph or something in there and it'll pop right up. But for whatever reason, right now I'm drawing a blank on this. So I find something very interesting. You talk about the inflation and how it's the Fed saying it's 1%. They're shooting for 2%. We're finding, and I wanted to ask you about this. Matter of fact, I was talking to my friend tonight, who is my boss also, and let's take the building sector, for example, okay? Because this is something I'm very, very familiar with and have been for years. Right now, Ellen, we're 12% over in housing starts. Now, I don't know how legitimate this is, but how many of these are people that are going to apply for loans and then not following through on them, or how many of them are refis. But the data came out today, the 12% increase over this same period last year. And there's been all this euphoria over this very, very low interest rate and refis and people being able to go out and borrow money for nothing, just like a redo of 2007. And it's really what it feels like with the momentum that's in the building sector. However, something that we are seeing this go around that has a lot of people, myself included, very, very nervous, is the true inflation rate on fuel and food and things like that. We can look at and say, yes, we're seeing real inflation. But like on wholesale building commodities, we're not. In fact, I mean, I don't want to give too many specifics out to my day-to-day life here, but there's a lot of instances where companies have been sucked in to this euphoria because of zero interest rate policy and this 0% refi phenomenon that's been going on for the last 2-3 years to try to restoke the building industry. But the commodities themselves are plummeting, and I mean plummeting. Usually, where you'd see year over year an increase at this time of year, in a lot of cases it's 40-50% lower than it was. And what the situation is ending up, what the cause or what the effect is, you have a lot of companies, manufacturers that are now selling. They don't really sell by the cost of it, what it costs to produce the goods, believe it or not. A lot of these people follow commodity pricing. So if lumber goes up, they increase their pricing. Conversely, if lumber falls, they reduce their pricing to follow the market. And there's instances now that I can attest to that you're selling things at 50-60% less than you paid for them a month ago, because we have this euphoria that things are about to pop. But in reality, the price of materials, the price of commodities are continuing to fall. It's a very, very bizarre situation.
Wow.
And even some of the owners of some big companies that we talk to, big manufacturers, say they've never seen anything like it. And I think it's a direct result of central controlled government, or trying to control this economy's decline from Washington, D.C. Does that all make sense to you?
I don't see why they would be trying to lower the cost of things like lumber. I can see why it might drop of its own accord, because there simply is no demand. I mean, there's no market for anything.
Nope,
there's no
right.
money out there to buy things. And so people sell at what things like gold and oil are speculative. And so they were run up because everybody was expecting the dollar to hyperinflate. That's why they were buying the gold. And now it's obvious that's not going to happen. And so now they're dumping the gold. And then there are numerous reasons why gold is going back down. But something like lumber, it seems to me, it's not a speculative type.
Oh, it absolutely.
Commodity.
Okay. Well, I agree with your analysis 100%. You're right. I think what you have is the true will of a free market to follow supply and demand. There has been a euphoria on demand, at least on the notion of demand or the hoptimism of demand. But the reality is so the supply was increased to meet this demand, and prices ran up to meet this fictitious fantasy demand. But in reality, the demand isn't there. So we're seeing this implosion of this commodity, and building materials in a lot of respects is no different than any other commodity. It's no different than oil or gold or corn or whatever. If you produce a whole bunch of it and people don't want a whole bunch of it, it's going to fall through the floor. So I mean, I see the effect of what you're talking about with precious metals, but I see it also in building materials. It is what happens, I believe, when you take free market capitalism or you take free markets in general and you try to control them. I think you get this duality going, and I think that's what we're seeing. Do you really think gold and silver were, and I should shut up and let you finish a thought here, but do you really think gold and silver it was run up because of the very small percentage of people in this country that actually anticipate hyperinflation? Or do you think it was run up?
Well, I think it first was run up because there were no other good investments. It used to be everybody's money was in housing, and then housing collapsed. And what are you going to do with your money? Bonds went to, or government securities went to almost nothing, or you can't live off the interest you would get off your government securities. So commodities were the hot ticket, so everybody jumped into them. Yeah. On lumber going down, or on housing going up right now, my understanding is that a lot of it, again, is speculation. It's these big groups, moneyed groups that are in there buying up houses because of the low interest rate, thinking they can resell them. But it's not that individual homeowners themselves have more money, or that they're capitalizing on the low interest rates. The interest rates have been low for for a long time, right?
Yeah, a very long time, and now they're starting to rise with that article I sent you today on the bond market. We're seeing an increase in interest rates starting to creep up, which you think that's a good thing, or do you think it's a good thing that central banks are unloading our debt?
I think the reason that they've had to keep interest rates low is because of two things. The government debt. We now have a $16 trillion plus government debt. And if you allowed interest rates to be what they used to be, like 10% or something like that, our entire tax base would go to pay interest on the debt. So they can't allow that. So they're keeping rates low for the government debt, but they could solve that by buying the entire debt through the Federal Reserve. Everybody would scream bloody murder if we tried it, because everybody would think it was hyperinflationary, but I don't think it would be. We've seen that model historically. This is what I wrote about in the public bank solution, that we only have one model, the Bank of North Dakota in the US. So I looked historically and globally at other public banking models. And as it turns out, 40% of banks globally are publicly owned. And historically, there's a strong tradition of publicly owned banks. And now I've just lost my train of thought.
Well, if you were saying that it wouldn't be inflationary necessarily for a public.
So historically, for example, in New Zealand or in Australia, the central bank has just issued the credit, and that's where they got their money, and it worked out very well. And it's too well. It worked out so well that the Bank of England came in quite alarmed because their colonies, which they had lost politically, but still had control of economically, they were losing economic control. Nobody had to borrow from the Bank of England if they could just issue their own credit, as the Australians figured out that they could do through their own central bank. And so the Bank of England, or the City of London, set up this whole central banking structure where the idea would be that the Bank of England would be at the top of the structure, and the central bank would issue the national money supply rather than the Treasury, and right. The Bank of England would call the shots.
Okay, when we come back, I want to get some time backing on that. When did that occur? Because these governments now, New Zealand and Australia, they march to the tune of the same central banking cabal. So we'll get back with Ellen Brown. We'll clarify when this occurred throughout her studies. She's found that where these public banking solutions, public banking models have worked. We'll be back with Ellen Brown and more Wide Awake News Radio. Hang tight. All right, welcome back to Wide Awake News Radio. If you're listening on Justin TV, I explained a little bit more in detail on the building commodities and their very, very bizarre turn of events that we've had this summer with them. Something I haven't seen in almost 25 years, and a lot of other people have been testifying to that. But I burned up enough in the last segment talking about that. Tell me about these banking models, Australia, New Zealand, where the government, again, every time you give us great examples, where the government, the people, said, all right, we're going to issue our own debt, we're going to issue our own money, and it's not going to be anything akin to what we have now. When did this occur, and what happened?
In 1912, the Australians were going through a depression just like we were, or from the 1890s, there was a banking collapse. And so instead of setting up something like the Federal Reserve, they set up a public central bank. They decided that the private banks had failed and that it was time for the government to step in. And so the bankers were quite alarmed that they were going to lose control. So they made sure that they had a seasoned banker to head this thing. Well, he saw, knowing how banking works and knowing that banks just issue the credit. I mean, they do it all by double entry bookkeeping. So they basically just create credit on their books. Knowing how that worked, he decided to use that for the benefit of the Australian people. And so they just issued credit for everything in sight that they needed for building things. So you would issue the credit first, then you build the thing, and then the proceeds from whatever you built would pay off the loan. So it's not like you were just pumping money into the system. You were pumping credit into the system which paid for itself. It's like a self-liquidating loan. But it was initiated by the central bank without having to borrow from somewhere else.
All right. All right. Here's a question I have then. Let's say, we get you elected president, and you can propose this idea without threat to your life, because obviously there would be if you tried to talk about this solution. What would we, the people, do with the 17 trillion minimum, right, that's talked about, that's sitting there, that is sovereign debt? How do we handle? I mean, I get what you're saying, where we issue the credit, we the people issue the credit without interest, and it goes to benefit society. If we're going to pay for it, it might as well benefit we the people. What happens to this outstanding $17 trillion in debt that has been hurtled onto the people?
Well, the 17 trillion is the other side of the balance sheet of our money supply. The circulating money supply is about the same. So really, there's nothing wrong with that debt. The only thing wrong with it is the interest. And if you get rid of the interest by funding it through your own central bank, so that you don't, basically you get the interest back, then you can either carry that debt forever, or you can turn it into dollars. And it's basically the same, because government securities are very liquid. They're actually traded often as if they were a currency. So you're not really changing the amount of currency that's out there. That's kind of like what quantitative easing is. They swap dollars for bonds, but they haven't really changed the amount of the circulating medium of exchange. So it seems to me the fact that we call it debt freaks everybody out. So call it dollars, and you effectively balance the thing out. And there is, at the American Monetary Institute, there was a Japanese speaker who had run all kinds of models, and he showed that you could turn the debt into dollars, and it wouldn't be inflationary, and it would actually stimulate the economy.
So the number one thing preventing this from occurring is interest on that debt.
The thing that's a hazard is the growing interest burden. If you get rid of the interest, then you just have a debt, which is the negative side of the money that we use. I mean, the government they don't issue the money, they borrow the money into existence, right, to pay all their bills. So over here, they have this big debt that reflects the money they just paid out. But really what they paid out were little receipts acknowledging that goods and services had been delivered to the government. So they were really just an acknowledgement of, you did something for us, and so now we acknowledge that we owe you. That's what money really is. It doesn't need to be a debt that's balanced on somewhere else on a balance sheet. But if you want to carry that debt just kind of as an accounting tool to see how much you put out there, it does no harm, as long as you can just keep rolling it over from year to year, and you don't have to pay interest on it. So it could it's all a mathematical thing. But there is another issue. This is something that I got into in this book as well. The whole social credit idea. C.H. Douglas came up with a book called Social Credit in the 1920s. He observed that workers never get paid enough to buy the products that they sell. It's the way the system works. That if you add up all the incomes of everybody in the country, they do not make nearly what the GDP is. And the reason is that producers set their prices at cost plus some profit for themselves. There's no point in doing it if they're not going to get a profit. But they don't pay the profit out into the system. They pay for the costs, and then so that money's out there to buy the products. So to make up the difference, the consumers borrow. So that's the bankers like it that way. They like it that there's not enough money out there, because that means we're always in debt to the banks. We always have to keep borrowing in order to buy our own GDP. So you could solve that problem by actually doing real quantitative easing, which would be an actual helicopter drop, where you actually give the people a bonus or a dividend or some extra money just to make the money out there equal to the GDP. And that's what I just wrote an article on a community currency in Kenya. That's basically what the whole community currency thing is, where you're giving each other credits. So you start in this mutual credit system by everybody gets some credits. So now you've got the money to spend. So you spend it on their products and they spend it on some other products, and the whole thing starts circulating. And you haven't inflated the prices. What you've done is allow goods and services to move that would otherwise have just sat on the shelves. They don't count in GDP until there's a sale. So you can increase GDP just by increasing the sales of the goods that are already sitting on the shelves. And you can do that by getting more money into the system. Which
it now is not. And the case, as you've already proven, is on some of these commodities, gold, oil, where the money isn't in the system that we go out there and buy it. And if it was equitable, where you had, if all these dollars are being created with the blood, sweat, and tears of the American people backing them, then it only seems logical that your dollars versus GDP model would be obviously a no-brainer. But what you said leading into it is 100% of the reason why President Andrew Jackson said, if you give these central banks the power to expand and then contract the monetary supply, you wake up in a land where you don't own your own clothes on your back. I'm paraphrasing Andrew Jackson there, but you get the point. And it's exactly the system we have now, to where everybody, the empirical everybody, is playing the game of trying to make ends meet, and it's impossible. You can't do it. You can't do it in a society where GDP outpaces incomes that much. Is that correct?
Right, and that's what the Australians were doing. Were issuing the credit they needed. That lifestyle was good, and the Bank of England came in. They sent their emissary, who later became the head of the Bank for International Settlements. So it's clear that this whole structure, the Bank of England, characterized itself as the apex of the system, of this international central banking system that they got the brilliant idea for because of the Commonwealth Bank of Australia. And then the Reserve Bank of New Zealand started doing the same thing that Australia did. So this advisor who came from the Bank of England said that they were living beyond their means and they had to tighten their belts. I mean, the same thing we're hearing today, that
austerity.
It won't work. You're being all this issuing money. It's not a sound system. You've got to get back to a sound balancing of the books, and so you've got to pay off your debts. And what happened was they went into the depression like everybody else. I mean, the Bank of England was the head of this central banking system that they set up, but after World War I, they no longer had the money to be the head of a global system, and the U.S. had the money at that point. So that's when they moved over into Switzerland with the Bank of International Settlements, which was a combination of England, France, the U.S., and Germany, although Germany was the country that was paying the reparations. But Germany actually wound up sort of manipulating that whole system. Anyways, it's all a very interesting history.